Today's top stories at NBR: claims Radius Care's recent capital raise decimated shareholder value, no O'Hagan's Bar lease renewal, the circular economy, and there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Wednesday, September 22nd. I'm Paul Brennan. Thanks again for joining us. The Treasury warned the government earlier this year that its contentious Three Waters reform program was complex and there was a risk it would not achieve what it set out to do. In a paper to Finance Minister Grant Robertson on May 7, obtained by the NBR under the Official Information Act, the Treasury also said further work was needed to ensure the appropriate incentives were in place for any Crown lending to the proposed water services entities. The Treasury cited both regulatory complexity and the complexity of the governance arrangements as areas of concern. Pricing of NZX-listed aged care provider Radius Care's recent capital raise decimated shareholder value, according to one investor at the company's virtual annual meeting this morning. In July, the company raised $30 million through a placement to fund the purchase of 4 aged care facilities that it operates but does not own from landlord Ohopo Holdings. As well as a $21.4 million cash component, Ohopo was issued $10 million in Radius shares. Shares fell 28% the week the newly issued shares began trading on market and were trading at 53 cents at midday today. During the question segment of Radius's meeting this morning, one investor asked who advised the pricing of the new shares and why did the directors agree to this price, which was so far below the listing price of 80 cents 9 months ago. The directors have decimated shareholder value. Please advise how you intend to restore value in the short term. Radius non-executive director Tim Sumner said it was a challenging question that resonated with the directors as well as shareholders. NZX-listed insurer Tower has once again downgraded its profit guidance as large house claims track at more than double last year's. In February, Tower had said it expected its net profit after tax would be at least 5% better than 2020's $28.4 million. Together, the 3 downgrades since May mean Tower now expects its net profit after tax to be about $10 million less than first anticipated. In a statement to the NZX Today, the insurer said that the latest downgrade was because large house claims, those above $50,000, during this financial year continued to be above long-term averages. NZX-listed Good Spirits has advised investors the landlord of its flagship O'Hagan's Bar on Auckland's waterfront would not be renewing its lease on Saturday, but the landlord claims it has known that since late 2020. In a note to the NZX this morning, Good Spirits said it was told on Saturday by a company owned in part by outspoken Auckland restaurateur Leo Malloy that it would not renew the lease on O'Hagan's pub at the Viaduct Harbour beyond the current expiry of December 2022. Malloy has indicated he intends standing as an Auckland mayoral candidate in the next local body election. The pub is one of 8 operated by the company, which previously owned a portfolio of assets, including the Mad Butcher franchise and the Nosh grocery chain. But high debt and low earnings forced the sale of everything, save the hospitality side, Better Bar Company. Malloy said GSH had already been given 2 opportunities to secure its future at the property in April and October last year, but the offers were not taken seriously. Mount Maunganui-founded pet food company Ziwi expects to double revenue by 2023 off the back of a COVID lockdown-spurred boom in all things pets. The company says the cash injection by Chinese private equity fund Fountainvest Partners would, if approved by government, support expansion of its production capacity and sales and marketing pushes into existing and new markets. Fountainvest has agreed to buy Mount Maunganui-founded premium air-dried pet food company Ziwi for an undisclosed sum. A new State of the Nation report led by the Sustainable Business Network says progress on the transition to a low-carbon circular economy is too slow and New Zealand businesses are missing out on potential benefits. An earlier analysis conducted for SBN in 2018 estimated then that Auckland could be between $6.3 and $8.8 billion better off in 2030 if it shifted to a circular, essentially waste-free economy. We'll also have much lower carbon emissions. In response to the findings, SBN is launching the Go Circular 2025 program in partnership with government agencies, a research project, and the country's largest private waste company, Waste Management New Zealand. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in his politics column, Brent Edwards says New Zealand's AUKUS moment might turn out to have benefits, while Maria Slade will cover the latest trends in banking. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place from 5:30 right here for another NBR Today.